Hey there, everyone. Today we're going to talk about money. My name is Ashley Voter. I'm a real estate agent with Proper Estates in the Bergen County, New Jersey area. There is no question that when it comes to your hard-earned money, you should be as cautious as possible, especially during times like these. So I thought it would be a good idea to hop on a call with Mike Sema. He is the CEO and founder of Get Rate Home Loans. So if you're ready, let's dive in. Hey Mike, how are you?
Good. How are you?
I'm good. Thanks for asking. So I just wanted to take a minute to explain how I know Mike. He is the program designer of the hybrid agent program with Getarate, and he's the perfect person to have on to talk about this because he can take what's typically a dry topic and make it an exciting one because he's just full of passion for his field and loans and how to be cautious with your own money. So, Mike, if you're ready, I'll start with some questions.
Yeah, let's do it.
Okay. So the first question is, what changes have you seen in the loan industry since the start of the pandemic? And do you think those changes are here to stay?
Well, there's been a couple of changes, especially when it comes to how banks and mortgage companies are underwriting and approving buyers with certain FICO scores. So credit scores under 680 and below. A lot of investors are pulling back right now. They're not really pre-approving clients or approving them based on even purchase transactions or refinance transactions. So that's really the biggest change that we've seen. FHA programs based on the government programs with the 3.5% down payment that home buyers love to use. That really took the biggest hit when it came to the overall FICO score requirements. But yeah, there's a lot of changes on cash out transactions based on refinance programs. The banks are panicking right now. Investors are panicking and they're pulling back a little bit. They kind of see how the dust is going to settle and what's really going to be left after all of this. So they know it's just the beginning of it. They know it's going to take some time for things to really get back to normal. We're all hoping for the best, and we're hoping that the real estate market really picks up again. Some areas are going to be affected more than others. Areas like New Jersey with a lack of inventory isn't going to be as affected as, areas like Florida that might have more inventory. So yeah, there's some changes right now that, do I see them sticking around for too long? They'll stick around for a while. Investors and lenders across the board, once things start picking up again and the economy starts doing good, they feel a lot more comfortable taking higher risk and really allowing those programs to come back again. But as of right now, yeah, I would definitely recommend double checking what you're approved for with your specific lender.
Yeah, and I think, Mike, it's important for people to keep in mind that we think of banks as these big conglomerates, but if we break it down, they're just like us, they're businesses, and they're being just as cautious as we are with our day-to-day. So it's likely to expect the same caution just as long as we are cautious with the disease. So the next question would be, what kind of loans have been getting the most action during COVID-19, and why might that be?
Good question. Refinance transactions have really picked up, especially the past 30 to 45 days. And it's because the interest rates have come down. And with the rates being closer to the low 3%, in some scenarios in the upper 2s for a 30-year fixed program, a lot of homeowners that have either purchased a home in the last couple of years or have possibly refinanced in the past with a higher interest rate are doing streamlined mortgages, just taking their current balance and streamlining it into a new term or keeping the same term that they're currently in and getting a lower interest rate and saving money monthly, saving money for the life of the loan. That's probably the most popular program, which is just a rate and term. Next to the rate and term is really cash out and debt consolidation has been really big lately. And what I mean by that is homeowners are using the equity in their home to pay off credit card debts, to pay off car payments, to pay off student loans, to really pay off high interest monthly payments that they're currently occurring with other debt and wrapping it all into one lump sum. And sometimes they're capable of saving $1,000, $1,500 a month by doing so. Even though their mortgage is a little bit higher, but the interest rate on their mortgage is so low, especially with rates being as low as they are right now, that homeowners are consolidating it and they're paying it down maybe the same way that they would have paid it down, but at a lower interest rate. Or they're just saving the money, especially when it comes to what's happening right now, to kind of prepare for a rainy day just in case they needed it.
And to that point too, Mike, with a lot of talk about forbearance going on, for people that want to refinance, can they do forbearance and refinance at the same time?
No.
Okay.
I've been getting this question a lot lately, especially when it comes to a ton of applications that have been coming in with current homeowners that have been watching the news. They're watching Trump, especially saying, "Hey, you don't have to pay your mortgage payment," which I get it. Like, it's amazing that these lenders and servicing departments are helping current homeowners that are in a difficult position and situation that they can't afford to pay their mortgage to be able to file for forbearance and have those 3 to 6 months off. But can they file for forbearance and refinance if they have maybe missed a payment to 2 payments? The answer is no. Most of the investors right now on the secondary want a consistent 12 payments in a row. And if you file for forbearance and have missed a payment, they won't allow you to refinance into a lower interest rate. You might have to pay your payments on time for 12 months for a full year before you could refinance. So it's hurt a lot of people because some individuals that might have not needed to file for forbearance thought that, hey, if I could get a couple months off, save some cash for the next 3 to 6 months and put it aside to cover myself for a rainy day, great. But they didn't know what the overall outcome would be and how that decision could affect their ability to possibly save 70, 80, 90,000 in interest for the life of the loan, depending on the loan amount, of course, and their current interest rate and the overall savings. But it's something that they wouldn't be able to do at this point. Not to say that the underwriting guidelines won't change. I see them changing every single day, but as of right now, they're going to have to get back on track for a minimum of 12 months before they could refinance. And unfortunately, we don't even know where rates are going to be a year from now. So those homeowners that have filed for forbearance that are trying to refinance, unfortunately, are not going to be able to.
Okay, that's really good to know. So this is why we're doing this, everyone, because education is key. It's important information to ask about before you dive into the big alluring forbearance claim, right? So what is one of the loan options that you wish people would take advantage of or you wish they were aware of?
In a regular market, I would definitely say the home buyer grant in the state of New Jersey. Coming from being raised from a single mother, my family, my mother always wanted to own a home. But unfortunately, growing up, it was very difficult to save money for the down payment. On top of that, for the closing costs, especially back then when they didn't have the lower down payment programs. With the state grant program, first-time home buyers can not only use the $10,000 state grant program for the down payment, but they could also structure the deal with a seller's concession that they could have the seller pay for the closing costs and purchase a home for less than $1,000 out of pocket. So that's my favorite program, if you're going to ask me, and a program I wish a lot more homeowners or home buyers knew about. But it's a great program. They're capable of buying multifamily homes. I've helped home buyers drop down their overall monthly rent by almost 50% compared to what they're currently paying, and owning a 2-family home by being able to collect rent from the second unit and doing it with less than $1,000 out of their pocket. So it's probably one of the best programs that's available right now with the biggest benefit. But other programs, depending on the overall goal, if it's someone that's, again, looking to purchase a home, I think the construction programs were really, really important for a lot of homeowners that couldn't really find their dream home or couldn't really find the home that they were looking for based on square footage or cost. What we were doing is really helping out a lot of homeowners take out either 2 or 3K or a construction loan to maybe purchase something cheaper, like a ranch that was a 2-bedroom ranch, and help them convert it into a 4 to 5 bedroom colonial designed the way that they want it designed, and still only with about a 3.5% down payment on the initial purchase of the ranch. So if the ranch costs $200,000, they're spending $7,000 out of their pocket, but they're capable of borrowing 100% of the construction money and building that colonial style home. So that's a really, really cool program. I absolutely love it. It would definitely helped out a lot of families get the home that they wanted without spending the overall price for that home, especially with the lack of inventory and how high values are. That's a really good program as well too. Construction financing has pulled back a little bit, especially during this pandemic, but hopefully within the next few months, things will start easing up again, that those programs will be available again.
Well, and that's a beautiful thing to have people set their sights on too, Mike, you know, for people that are just waiting for things to settle down, and maybe they aren't seeing what they love online, or they're just, nothing's clicking before. They have opportunity, and having the education to know that those options are there for them to make that dream come alive. I mean, like that's the dream, right? So that's
Right.
the goal.
When
So
those
that's
companies
perfect.
do come around, there's such a high demand. The demand for in the past 10 years, it's been at the highest that we've seen it, but the overall inventory is at the lowest that we've
So
seen
low.
it. So when a good property, a good price comes around, all of a sudden there's 15 to 20 different offers on it, and it becomes a more. So it's not a buyer's market right now that buyers could really always get the best deal out there. Not to say that it's not doable or possible, it definitely is. Uh, but the 2 or 3K is kind of a cool option to have, just in case it's been 6 months, 9 months, you're just done and you want to just build something.
Not there. Yeah, that's a great option for people to just even keep in their back pocket, you know, if they want to keep looking, and then one day they just throw their hands up and they're done, you know, at least they have that option available to them. So that's great. So also, Mike, what do you think potential buyers should be most mindful in these in their financials during these times, and if they want to be pre-approved in the future, what should they be focused on?
Good question. One of the things I've been reading up a lot about is how um, some some people are filing, of course, for unemployment because they have to. Some people are filing for unemployment because maybe they don't have to. It's just because they want to, because maybe they'll make the same amount of money than working for the company that they're currently with without having to work. The problem with that is they have to be employed for a consistent amount of time for them to get approved. So if they're thinking about purchasing a home, if there's a gap of employment of more than 6 months, it could be an issue based on the type of program that they're looking to qualify for. So depending on what their ultimate goal is, that gap is really important to make sure that you keep it under 6 months. And as long as there's a lot of explanation, underwriters will accept it and use their income at that point when they are trying to qualify for a home. But in regards to their finances, the programs are still available. I think the credit needs to be above 680. Really just pay your bills on time as much as you can. Try to possibly consolidate some debt to drop down the overall percentage of debt that you have outstanding on certain credit cards, because once you go over that 50 to 60% mark, becomes a negative involvement on your credit and starts affecting your credit score. So just making your payments on time, trying to stay above the 680 range, and having consistency in income would definitely help out.
Great. I think that's huge too. People really struggle with the concepts of credit. I think it's just, there's so much that goes into understanding a credit score, that sometimes people just get lost and then give up, you know?
Right.
So I think, you know, people just making sure that they keep their cadence with paying their credit statements on time, and, you know, not overloading the credit cards while we're sitting at home shopping online right now. You know, I think that's important to just keep in mind for people that are looking to purchase in the next few months or even the next year, right?
Right, right.
Right.
Especially there's no point of shopping right now, especially if no one's going to see you for the next couple months. So
Yeah,
yeah,
right. I mean,
I was about to buy.
we gotta think big picture here.
It's funny, I was on Amazon. I was about to buy a pair of shoes, and I'm like, you know what? Like, I'm not even going to be able to wear them now for the next couple of months. So what's the point of even buying them?
I
But
know.
yeah, that's funny.
It's screen shopping. We're all screen shopping instead of window shopping. So.
Yeah.
Uh, all right. So the big question that I've encountered a lot in the last few weeks, I wanted to get your opinion on this. How do you feel about pre-approvals? Are they still as important as they were, or is it more important? And why do you think so?
It's a really good question. I think a buyer should get an updated pre-approval on every single property that they're thinking about putting in an offer in. And let me explain why. Most lenders, brokers, bankers out there are just going to issue a pre-approval based on a scenario that a buyer enters into their system or talks to them about over the phone. That scenario changes, especially when it comes to buying power, and a pre-approval that was issued out 3 months ago, or 2 months ago, or even 30 days ago for a specific amount could be different today, meaning rates just came down. So someone's buying power could have gone up. So that $300,000 pre-approval now could have turned into $350,000 pre-approval. I truly believe it's important to always make sure you get an updated pre-approval when you are switching towns as well too, because there's a huge difference between property taxes. Perfect example, if we're talking about the Bergen County, Passaic County area, or even northern New Jersey, there's a huge difference on a pre-approval from a property in Wayne, New Jersey and Paramus, New Jersey, because the taxes are almost half the amount compared to what they are in Wayne. So somebody that's qualified for a $300,000 home in Wayne could be qualified for a $450,000 home in Paramus. So I think it's really important, really always based on the property you're interested in, double check the overall pre-approval amount to make sure you're pre-approved for it, but also most importantly, double check the changes that have just occurred, especially when it comes to the underwriting guidelines in their specific scenario, based on where their debt ratios are, where their credit is, and the type of program that they were thinking about qualifying for. Is it still available? And that's something that I would definitely reach out to the previous lender that they were working with, or other lenders online, and just double check if the program isn't available anymore. Double check to see what other options they do have. So. Really good question. I would definitely recommend for everybody to double check the pre-approval. We did it for all of our clients internally, just to make sure, based on the scenario and the location and what their ultimate goals are. We double check to see if they're still in the same position or even a better position, because rates are so much lower right now. So yes, the answer is yes.
The answer is yes. Pre-approvals are important, everyone. I think a lot of times, my clients think that I'm just haggling them over and over again about this pre-approval. And I just want them to understand that it's so important for what they can get. There's so many opportunities that they might miss if they didn't just double check their pre-approval. Or, even now with COVID-19, pre-approvals have like doubled in value, in my opinion, because some sellers won't even let you in the door unless you have that pre-approval, because they want to make sure someone coming into their home during the pandemic is serious, and able to do the transaction. So, I'm not busting everybody. This is important. Pre-approval is key to just knowing what you're able to afford, and it might be even more than people thought they would be able to do.
Yeah, no, I couldn't agree with you more, especially when it comes to sellers. Most sellers aren't letting anybody in their home, especially if they're not pre-approved for this specific amount. I think sellers agents are even stricter now, making sure that they're protecting their clients as well too, and not allowing a whole family to come in. Usually it's only one, maybe two people tops, if they're covered from head to toe based on masks and gloves and everything else. So
paper towels, all the works.
Yeah. The appointment without the pre-approval. So make sure you get an updated one, and make sure you get one from a legitimate company, and not a company that's just issuing out pre-qualification letters from something that they never reviewed someone's income, they never reviewed someone's credit, and especially their cash reserves, because cash reserves is a huge part of this right now. A lot of programs have changed that. A buyer needs more reserves for a rainy day. God forbid anything was to happen. Some investors have changed their underwriting guidelines saying, hey, you need to have a minimum of 6 months of monthly payments, including principal, interest, taxes, and insurance, aside in a savings account to be able to cover you for a rainy day. So things like that are changing. So it's important to just double check. And for the buyer, it's not work that they need to do. It's the mortgage company's job. So don't feel bad. Shoot them an email and say, hey, I'm interested in these 15 different properties. Give me a pre-approval on every single one of them. They're going to have to do it.
Right, right. And I think too that, sometimes the question can sometimes rub people the wrong way, like me asking them, are you pre-approved? Did you get it updated? As if like I don't trust that they're following up, but it really does come from a place where I just want to make sure that they get taken care of. And I love that you touched on getting it updated for every property, because it is so important, especially if time has gone by in the searching process. If
Right.
2 months have gone by, people don't realize how much has changed, even just in that time frame.
Right.
So I think, moral of the story, pre-approvals are utmost importance.
One more thing I would, if you don't mind, I touch up on is the negotiation sometimes changes based on the pre-approval. So when there's an updated pre-approval, especially now that your buying power just went up, or the overall monthly payment just went down because the interest rates are a little bit lower, you have more wiggle room to be able to negotiate. So maybe something that you would have not offered, you might have stuck with a $250,000 cap. Now you're at 270 with the same payment. Are you willing to lose a property knowing that you could spend an additional $20,000 on the purchase price, but you could afford it because it's under the minimum monthly payment you wanted to be under? So that's why it's so important to understand that before you even step in. But it's also important to work with a company that's there and available to update those pre-approvals when a buyer really needs them. Some of these companies sometimes take a week to do it. So it's important for a buyer to work with someone that's available and could really issue it out within a couple of hours tops.
Yes. And I mean, I've had a great experience working with anyone at the Get-A-Rate team. Everyone really does a good job of being there to answer your calls, to get on the phone, make sure your client gets the pre-approval they need, because in this competitive buyer's market, it can make or break a scenario if you don't have the right document to present with your offer. So I think it's important too that, buyers make sure that they don't just go with whatever quick lender they found online or someone that gave them a pre-qualification, because there's a lot more to the story even after the pre-approval. There's a lot of important steps to go through, and it's crucial to have someone you trust on the other side of it. So I'm really grateful that you came on to talk with us today, Mike, because I think this information will help a lot of people see some clarity in what's going on, and that yes, we all have to maybe do a couple of extra steps of checking and calling to make sure we're in the right process, and but we can make it happen, at the end of the day. So
Nice. Well, you're very welcome. Thank you for having me. And yeah, any questions, you can always reach out.
awesome, Mike. Thank you so much for your time. I hope everyone found some value in this video, and I'll talk to you guys soon.